Well. Welcome back to Krown's Crypto Cave. It's a nice little early Tuesday evening night over here from Chicago, Illinois. We fly over the beautiful downtown section. Oh my God, the city is so goddamn majestic. But hey, do want to wish you well on this nice Tuesday, whether it's Taco Tuesday or Tequila Tuesday or just a regular boring Tuesday like it is for me. Staring at pixels on your computer screen, well, that's pretty much what I do no matter what day it is. And with this 24/7 market giving no rest to the wicked, well, you can count on today being another day of no rest. So hey, we got plenty to talk about with Bitcoin, because Bitcoin actually did have a little bit of an event earlier this morning, not necessarily Bitcoin itself, but U.S. regulators kind of meeting to discuss crypto regulations, and that's going to really tie into what we're looking at today. So without further ado, I do want to wish you the best, the happiest of the happiest, as we like to say. And with that said, I'm going to initiate that good old teleportation. Press the button, baby. There it is. Holy fucking moly. Fly me off, baby. Beam me up into the live scene right here. And starting off with a little bit of proof of trade. And again, just another example of options just being a much easier way to handle sideways boring bullshit like we're looking at on price action right now. I'm sure a lot of people are out there trying to trade this chop and scalping here and there, or maybe looking for the trending trades, and maybe you're successful at it, maybe you're not. But at the end of the day, man, I just feel like this is just so much more of an easier way to kind of look at this and capture ranges and profit from the lack of movement instead of needing movement, which more or less actually doesn't really all that much happen unless you're looking at like the macro, of course. But with regards to what we're looking at right here, still just short a shit ton of call premium. I've been getting a lot of questions about this. Krown, what are you going to do against your short 9,500 strike calls? They're actually covered against my spot underlying position, so I'm actually quite happy with that. And you can see that I do have a little bit of a straddle on right now. Nothing too crazy, but keep in mind that if you're watching these videos just to copy these trades, hey, I'm not here to be your dad and tell you what to do, but what I can say is it's probably not a good idea, because understand that I'm always trading options versus spot and futures essentially. So whenever I have a position on here, I do have a position correlating with the spot underline, especially if in this case it's going to be a cover. These guys on way outside of the money right here, no big deal with those ones right now, but I will be happy to cover those going forwards. And just my general rule with option is I actually want to be selling options on the same side of where the macro trend is, because I'm always happy to cover in that direction. So during the bear market, I was always selling puts and then selling more of the spot underline every time that we just broke a new level. And that's kind of the most, just kind of the easiest way to go about things from, in my experience. And same thing for the upside market right here, just always selling calls and then buying spot underline, because I'm happy to be along the spot underline, if I'm generally, bullish on the long term. Anyways, PNL in this position, just growing up a little bit more each and every day. And while it is Tuesday and we're running about 1.5 Bitcoin profit right now, it's pretty damn good. In just the last few weeks have been phenomenally successful with trading options. Not always going to be like that, but this is a time to really be doing it. So if you do have the options knowledge, I would strongly suggest getting on Deribit, because Jesus Christ, man, the opportunity there is fucking astronomical. Anyways, getting into the price action right now, let's actually go to Stamp. And of course, when it comes down to it, I don't want to make things any more complicated than they really need to be. And if I didn't want to do that, what I could do is this: I could show you these two moving averages right here, and I'd say, hey, until one of these two moving averages break, I don't see any major massive move to be had. If we break the yellow 21 to exponential to the upside, not only will I be happy to hold long-term and medium-term longs, but I'd actually be targeting to move just generally to the upside, but more immediately, I suppose, somewhere right around about 11,200-ish region, and then over time, this will really start to shape up as a more bullish reaccumulation pattern. And if we break the Cyan 89 exponential moving average right here to the downside, which is about 9150-ish region, basically where we kind of wicked off a couple days ago, then I'd be looking for that move into the 8,000s, maybe even like high 7,000s, something like that. We'll get into the intricacies of this as we go along, but realistically, I just want to show that the medium time frame, and of course, just by the nature of it, the long-term time frame as well, hasn't really changed at all since we've gotten into this more tight consolidation. And in fact, as this consolidation becomes more and more mature, you do notice that it's becoming more and more boring day by day, right? The range tightens, less goes on, less happens. A lot more fuckery happens in the very low time frames, but hey, at the end of the day, what we're looking at right here is actually pretty damn stock standard. It's pretty damn simple. We have a nice orderly drop off in volume going from left to right here. We still got a little bit of room left in this bitch, but I shouldn't say an apex, but he's kind of running out of room during this area right and over here, which will take us into about the first 10 days of August. So it is rapidly declining, which would suggest that we actually do find resolution on this formation as a whole. And keep in mind, this is the whole formation, not just this guy right here, but this whole damn thing. So with regards to that, that we're going to likely see a major, massive move within the next week and a half is what I'd say, and probably even a little bit before that, maybe right around here. So the 4th of August, so a little bit into, I suppose maybe that's like beginning next week, perhaps, maybe like a week from now. It's the 30th right now of July. So what, we got like another, about 5-6 days. So almost a week. Anyways, looking at our momentum oscillators, we do see, first and foremost, let's actually look at historical volatility percentile and kind of match it up with that. We do see historical volatility percentile for the last week or so. For the first time in a very long time, we're actually below the moving average on this. For the whole like few months prior, we were above the moving average, telling us that, we're still kind of moving, we're still kind of trending. Right now, you can see that Bitcoin's really cooling off in the higher time frames, and this is exactly what you'd expect from this perspective. So I like it when these two things line up with each other, not because, not because I don't trust, neither one. It just adds validity to the overall case of this as just one massive consolidation. Now what I like to do is actually look at the momentum oscillator to kind of judge where this is likely to break. When we look at the daily Stokes right here, we're actually crossing the upside right now. Not only that, but I believe we do actually have a very slight amount. Do we have a very slight? I was going to say a very slight amount of bullish divergence there. And in fact, we actually do not. So I take that one back. But looking at daily RSI, do we have any sort of hidden bullish divergence here? I think just a very slight amount between this point on the 27th and this point right on over here on the 16th. Probably gonna have to get out the mark scope for that one, which says that it's really not that big of a deal, to be fair. But where are we kind of situated right now? Yeah, we're kind of hanging out the top side of the bearish control zone, so everything is extremely fragile right now. And in this next move is going to really drive all these guys. We're not really getting too much from this right here right now. Actually, in fact, it's not all that helpful. We're gonna have to go and consult with our 12-hour, which I think has a little bit more hints within inside of it. And we do see 12-hour Stokes actually headed upwards and onwards. And so here's where the picture becomes a little bit more clear to me, and here's where I can start to come up with biases essentially. And when we look at the 12-hour Stokes going to the upside, what does that mean historically speaking? Well, within the concepts of this consolidation, it's actually been some pretty fucking good crosses, but not just to the upside, but also to the downside. Like this last one getting our last top right around here at 10,600, leading on for this move about $1,500 lower. The last cross of the last cross to the upside that we saw right on over here on 16th of July. What's up, Saint? Some more. Good to meet you, man. Welcome, my friend. Was getting this base right on over here from about 9,200 all the way to 11,000, so about almost a $2,000 run right there. And then the last cross to the downside was right on over here, getting essentially this high, pretty much right at the fucking high for about a $4,000 move from 13,000 to 9,000. And then the last cross to the upside before that was right on over here on the 2nd of July, leading us up from 10,000 all the way to about 13,000 a couple weeks later. So my point is that we are actually starting to see some signatures really fall into the market, and with the 12-hour RSI, we actually do see a little bit of bullish divergence here. Again, a very slight amount. We're really cutting things close, but yes, it is present, and we actually, more importantly, have taken out the exponential right here. Now, yes, you do get a couple snakes around from beforehand, but typically once you get that sort of momentum getting picked up once again, it actually does build upon itself, and typically after a fake out or two, it actually will take off. So when we line this up with daily, more importantly, we do see that the daily kind of wants to fall through as well. So we see daily Stokes hinting at across the upside. This is not confirmed just yet. It is not confirmed just yet. I repeat, it is not confirmed just yet. But in about 1 hour and 9 minutes, we will be having the daily total close. And if we close anywhere above about 9,600, it will certainly confirm to the upside. If we close anywhere above 9,550, it might. I don't necessarily know though. If it's below 9,600, I can definitely say if it's above 9,600, then yes, it will. I'd be looking for that fall through. Not only that, but of course, when we kind of look at the 12-hour and then the daily RSI, we can kind of come up with the corollary here as well. And what I see here, more importantly, is that Bitcoin's likely to test the exponential on the daily RSI, but that doesn't mean too much. That's going to be resistance, and look where it's coming in right around. It's coming in right around the top of the bearish control zone. So it's going to be a big deal if we get rejected there first and foremost. That's essentially what I'm trying to get out right now. And I'm not necessarily trying to be the fucking person with the crystal ball, saying where exactly where it's going to go. We got the move that we were looking for in the morning's video. We already got that. That goes back. Now we go back to neutrality essentially. And yes, I am a little bit biased towards perhaps this continuing a little bit more to the upside. But here's the thing: when we start to pull this in with the weekly, this is where things get a little bit more nasty. So turn your eyes away. Turn your eyes away right now if you just want, if you just wanted all those more positive statements. And we'll bring it on like this. And we actually have closed our first weekly little below the red 10-cent moving average right here. And guess where we got stopped on this last little run to the upside? Right at the red 10 symbol. Actually, we got a little bit above it on BitMexico getting all the way up to almost 9,900, but all exchanges stopped pretty much right at it. And what I was saying for this past week or so sorry, not this past week, but the past few days, ever since we got this closure on the weekly, is that this is going to be pretty damn strong resistance, and that any real move above the red 10 simple on the weekly is likely to get faded. And I believe that's what we're seeing right now. So that does make it difficult for price action to kind of rally up here. And more importantly, technically, the target on this would actually be a test down to the 21 exponential moving average. Doesn't mean it needs to happen on this weekly dildo right here. Of course, it can happen over time, but it probably will happen over time. Just frustrating more people. But at some point in time, I would be looking at a move likely down to the 21 exponential moving average on the weekly, which is of course actually quite a healthy thing to do. The 21 exponential moving average on the weekly is both a great base for for upwards markets to buy off of, and a great place to sell off of during downwards markets. It's a very, very natural and healthy place to kind of follow, and we do see that Bitcoin has a damn good history of following it both to the upside and the downside in its history, as you can see right on over here. I guess maybe we should go to exchange with more price action history, and there you go. Bitcoin loves the 21 on on its upwards rallies, like right here for a couple years, and again right here for a couple years, and also for the downside, as you can see, getting all these highs right here and right here as well during 2018. But more importantly, we have not tested the 21 exponential moving average once during this whole run to the upside. So it is a little bit, it's a little bit uncharacteristic of what we're looking at right now, and that is a little bit concerning, because realistically, like I said, it's actually quite healthy for assets to come back down and test their 21 on the weekly, and we've been away from it for about the last 6 months or so. So it does kind of follow that if Bitcoin is going to play out some downside, we likely do find ourselves around that region, which is around 8,200 region. Problem with that area is everyone's fucking looking at it. Why? Because we got the Gap Boys back in the house, and they know what you did last summer. So get ready for your Gap Boy analysis going on right here. And 14th of June, of course, still have this massive gap all the way from about 8,500ish region, still very much apparent and still very much valid as well. So I think it is worth mentioning. And yes, at some point in time, it likely does get filled. I mean, every gap that I've ever seen in traditional stock markets has been filled, not unlike OTC bullshit or like stocks that are not on like real exchanges, but stocks that are on real exchanges, yes, they do get filled. Sometimes it does take years at a time, and Bitcoin has been away from this one for about 2 months now. So all the Gap Boys kind of targeting this area right here, well, probably shooting themselves a little bit in the foot, because when everyone's saying the same thing, things can get drawn out like this. It's going to take its time, and more importantly, if we actually do approach this area, it's going to bring up that age-old debacle of, do we get front ran from this area where it would kind of align with maybe a low, or maybe we already have the low in, maybe we put in the low somewhere right around about 8,900, or we get overshot. In that case, of like an overshoot, I'd probably be looking somewhere right around 7,800. I'd imagine 7,800 would kind of look about right, somewhere in this pocket right here between about 78 and 76. If we get run over. So again, if Bitcoin actually does fall down here, while I probably will be buying some right around the gap, I'd probably keep some in the back pocket as well, just because you never know what's going to happen with these things, and of course you don't need to let your whole load go in one blow, as they say. So with regards to what we're seeing on CMEs, we actually see a little bit of a different signature here, but daily is following through with spot, and the daily Stokes have been extremely good at getting price action, especially from this region right here. The last couple crosses that we saw from this region were basically in February from the turnaround, like literally this area right here at about 3,300, going all the way up for the next 6 months. And then the time before that, from the same region, was pretty much putting our lows in December right on over here. So the actual low of the last past bear market cycle. So it is a damn big deal right now of what we're doing. Not only that, we see the same signature with historical volatility percentile. It's getting back below the moving average. So we're obviously maturing. And then we do see daily RSI is different than spot. However, we see daily RSI actually as a rejection of the bearish control zone thus far, but realistically, we don't really have enough information just yet. I'm kind of splitting hairs here by looking at this right now. Is it technically right what I'm saying? Yes. Is it how it operates in reality? That's a little bit of a different conversation, but we are kind of splitting hairs here because, well, this is a mental masturbation, autistic, technical autist analysis right now. Because realistically, like I said, on the daily, if you want to just synthesize it down to the cyan 89 exponential moving average and the yellow 21 exponential moving average, and just look for a break of that for your next, semi-trending play, either to like 11,200 or down to 8,500 or 8,000, whatever it ends up being, that's essentially what I'd be doing. But because we're here right now, and because this is what I do for this is what I'm going to do anyways, man. I can either talk to myself or talking to a microphone, and I might as well talk in the microphone during this time. So I do think it's worth mentioning, however, that CMEs do make me a little bit biased to the upside. The reason why I say that is because historical volatility percentile right now is extremely low. We have not seen it this low in maybe ever. No, the last time that we saw it this low was coming out of this base from $4,000 in March. The time before that was just about a month prior, right on over here. The time before that was basically getting the low at February, in February. So what does that mean? Can we pair this up with anything else? Actually, just so happens we can, because look at the 4-hour jewel. The 4-hour jewel has a fucking phenomenal signal going on right now. Now, to be fair, it actually did play out not a few ticks ago, but like about half a day ago to a day ago, right on over here, getting the move out from about 9,500 on CMEs, which is about $200 higher than spot right now. So about, it'd be like 94.50 on spot, and then getting this move up to about almost 10,000. So about a $500 move, and that's pretty fucking good. But do I think that we have the potential to do more here? Actually, I do. And the reason why I say that is because typically when you do get a good, a pretty good signal like this, it does get a little bit more airtime. It is worth mentioning, however, that obviously we kind of are forming a trend line right here. So technically, it actually would imply a little bit, but actually, resistance overhead. This is not a perfect example of, of a jewel signal. You'd kind of see something similar to this, but in a more deep area, like around here. That's a perfect signal. This one right here is pretty damn good, but not perfect, but pretty damn good. We do see 4-hour Stokes up and at him as well, actually getting above the bearish control zone for the first time in a little bit, and we also see 4-hour RSI regaining the exponential and looking constructive in here as it kind of works its way outside of the bearish control zone, which we've been really kind of playing around with for the last Jesus Christ, man, for the last couple of weeks. It looks like we're going all the way back to 18th of July, so it is still a little bit new, but more importantly, we do have a very nice and easily well-defined formation going on right now. We actually are making a descending triangle, which is typically a more bearishly resolved pattern, right? And does that mean that it's always going to be resolved to the downside? Not always. I've seen them certainly break up to the upside, but statistically speaking, way more likely to break out to the downside than the upside. I think for these ones, it's about a 77% chance to break out to the downside rather than the upside. And triangles, in my experience, have been pretty fucking good. It's either 77% or 82%. I forget which one it is, but they're pretty high probability, actually. Anyways, the rate of trade is the same regardless of whether you put a name on this or not. If we break below this horizontal right here at about 9,500, this is again on CMEs, not spot. Spot, the same area would be about 9,400. Then yes, we can make a measure move and probably look, further to the downside. A measure move on CMEs would point us, holy shit, where? Oh my God, 8,500. Is that the CME gap? Gap boys back, baby. We fucking gapping it up. No, just kidding. But wow, sound like a complete fucking moron. But hey, I'll just embarrass myself so you can laugh at me, and then we'll call it even. We also have the 0.5 Fibonacci retracement from the ultimate high of this run thus far to the ultimate low of this run as well, coming in right around 8,500 as well. We also have the weekly 21. We also have the measure move on CMEs. We have CME gap. We have, if you take kind of an average of all of these, of all of these, all these death crosses that we see on the 4-hour, which a lot of people were talking about a week ago, myself included, because it is a big deal. Once we got the death cross, went all the way from about 10,600 basically down to 9,000. $1,500 move, pretty fucking massive. However, and I'm not going to go over it on this video right now, but if you do want to see the examples of it, if you want to see them actually done out over time with each and every one, then go to my last video that I uploaded on the long-term analysis playlist on Sunday, and that will go through all these different examples of golden crosses and death crosses in an overall upwards market. Because remember, this is an overall upwards market for the past 6 months. I mean, we're not necessarily in a bearish trend right here, right? This is an upwards market, so I wanted to compare the past prior death crosses and what they produced in an overall upwards market. And when I went through them, I found that on average, and again, go and confirm this yourself with my. You can look at my video, or you can do it yourself. But from death cross to golden cross, which is really what I'm waiting for here. I honestly, if you want to make your life fucking easy, I'm just gonna wait for the golden cross here. You're not going to get the ultimate low on it, but you get the momentum, and that matters a lot more as a trader, in my opinion. Of course, this is not financial advice, not financial advisor, but that is what I am doing essentially for waiting for my next medium to long-term position, and then also the daily 21 exponential moving average. Whichever one happens first, I'll put a little bit of position on there, and then I'll add more when the second one happens. Anyways, on average, before I get more dissected in my own brain, on average, these death crosses, from death cross to golden cross, it typically takes about 2 weeks. It can take as little as 1 week and as long as about a month in the most outlier cases. But for the most part, it took about 10 days to 2 weeks from what I've looked at. And on average, the actual damage that is done to price action is highly variable. In some cases, the death cross happens after the low is actually put in on that run, and in some cases, the death cross happens well after, or sorry, the low is put in well after the death cross happens, and it's down as much as 20%. By the way, if we just shaved off 20% off this price action right here, where would that put us in around? Gap boys back at it, baby. These Gap boys are fucking ready with their girthy green dildos to buy it up and then get run over. Just kidding, but buy them up. Sorry, getting a little bit excited for my own taste, but you can imagine that if Bitcoin does break down here, which I'm not so convinced that it does, and we're actually going to get into a little bit more of a fundamental analysis of this. What is going on here? Jesus Christ. What the fuck is going on there? Never mind. Anyways, so yeah. At the end of the day, a lot of things coming in there. Now, before I get too sidetracked by my own silly brain, I do want to talk about this. So there is an event going on right now, or sorry, there was an event that went on early this morning that I alluded to earlier, which was about crypto regulation, from a U.S. standpoint. Essentially, the U.S. government kind of coming in and talking about crypto regulation, essentially. And right now, when Bitcoin's on major supports like this, it shows that the sentiments are pretty bad. Of course, we can actually gauge the sentiments as well with the crypto fear and greed index. We're ticking out at 22 right now, which is extreme fear. In fact, if we go down here, you can see that this is, actually pretty fucking low. We actually got down to a 16 not so long ago, and this is pretty much where we were hanging out during most of the bear market when we were kind of on our lows there. So my point is that when we're looking at a sentiment indicator like this, it's more of a secondary, tertiary type thing to begin with. But putting it into the just kind of throwing it into the ring and seeing where see who it kind of tallies up for, I would say that this is actually a more bullish thing because Bitcoin is down on major supports right now, just like the 6,000 level during 2018, and sentiment right now is extremely low as we have technically a bearishly interpreted event going on right now with crypto regulations being talked about. So the expectations, so what we can gain from that is that the expectations from this event are negative. So that means that if something that doesn't essentially be if we have something that is essentially not deemed extremely negative that comes out from this meeting, usually I see price action go up from these sorts of scenarios. You'll probably, if you're familiar with traditional stock market, if you trade a lot of traditional stock market and you've traded earnings before, you know this to be true. How do you know this to be true? Just think about fucking earnings, right? Earnings, what happens? You have an expected earnings price, and then you have what they actually put out. And if the expected one is positive, and then the real one is positive, but the real one is even just a cent less, literally just a fucking cent less than the expected one, price action will fucking dump. Here's also the thing too. A lot of the time you'll see strong stocks rallying to their earnings, and then they'll and then they'll just literally meet their expectations, and then they'll dump right afterwards. Why? Because the expectation has been met. So there isn't anything more to be going off of. It was already priced in, and that's exactly what I think we're seeing right now. This is being priced in. A negative interpretation to this event is actually being priced in. So pair that up with Bitcoin being on major supports right now, which is basically the daily 89 exponential moving average, right on over here. If we put this on right there, then it makes it very difficult to actually force price action down from this current area right now. I'm not saying that Bitcoin can't go down over a more longitudinal area of time. And like I said, it would be pretty uncharacteristic for Bitcoin to not test the 21 exponential moving average on the weekly, because literally every time that we've had, sorry, I actually didn't even talk about this one, but again, if you've been watching these videos, you already know what I'm about to allude to. I'm basically talking about the weekly 21 exponential moving average, which essentially each and every time that we've seen, this signature on the weekly jewel, we have tested the 21 exponential moving average, and that is this. We see the light blue oscillator get into the more critical zone above the 80 marker. We get the light blue oscillator with a red flash in the background, which is a warning signal, and then we get a negative slope on that same light blue oscillator, and then typically crossing the pink slower moving oscillator as well. And with each and every one of those, ticked off, we always, in the history of Bitcoin, have always come down and tested the yellow 21 exponential moving average each and every time. And we're talking about a sample size of actually 10 so far. So 10 out of 10 times 100% has hit. We're working on number 11 right now, and as you can see, I mean, we're actually really not even that far away from it. So yes, there certainly are bearish things kind of pointing us in the face. Bearish is the wrong term. Things that point further downside. Bearish would really imply that, we're going to create a long-term macro downtrend, which I'm not in any way at all whatsoever bearish on any asset any asset that's above its yellow 21 exponential, it's above its yellow 21, that's above its 21 exponential moving average on the weekly, or 20 if you want to use 20 as well. It's all the same thing, really. And even then, that would just be your first major warning signal. That actually doesn't get the job done. The next one that really gets the job done is the monthly 21, or the month, or even just the monthly 20 simple, both of equal importance. And if we start breaking that area, then yeah, I'm gonna be talking about, hey, maybe we come back down to 6,000, 5,000. You want to go back down there? But as you can see right now, we're nowhere near this area. So for me, we'd have to break the 21 before I even consider that we are literally, topping out and reversing into an actual macro long-term downtrend, which I mean, right now I'm just not really of that opinion. And then second most important, I'd also want to see, or sorry, third most important, I also want to see the 3-day white 200 simple break to the downside. So this one's also been a damn good indication of kind of where we are in the overall general market phase. You can see that when we were above it during 2011 to 2013, pretty good. When we lose it in 2014, bad. When we regain it right over here in 2015, good. And then it's good for the next few years once again. Then we lose it again in 2018, bad. Then we regain it right in over here, good. It's probably annoying as fuck. Sorry. Anyways, you can see that this area is coming in right around about 7,400. So I do look at that as kind of like a last, like a last ditch base as I reach for my water. Man, I'm fucking thirsty right now. Just 1 second. Man, so good doing a stream from Guantanamo Bay today. Jesus Christ. What is this orange bullshit that I'm wearing? Anyways, so that's kind of my marker for like switching up my overall macro view on Bitcoin. Of course, everyone's talking about the golden cross on the 3-day. We have a golden cross on the 3-day. Did you know that we have a golden cross on the 3-day? Yeah, we do have a golden cross on the 3-day. It is true. But I don't really care that much. This is actually not a good example of a good cross. In fact, this would suggest that we probably actually dump into it. An example of a good cross would be actually right over here, where price action is very, 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 very close to the cross as it happens. And then so you immediately know if this cross is going to be supported by the Bolton algo is actually on the buy side as things get picked up. Ooh, whoa. Steak coming up right now. Good. Just can eat it again, man. It's even better. But yeah, price action is significantly further away, which is not the kind of cross that you want to see. So you want to see something like this to the downside, and you want to see something like this to the upside. But you don't want to see something like this where we're literally like about 10 to 20% away. Sorry, like more than 20% away, like 30% away actually. So that actually would not be. I don't really consider this, a big strong point actually for the bulls. I think the exponential moving average golden cross, which happened ages ago, right on over here, this was a good one coming off of a base as we took out the white 200 simple moving average to the upside. That's a damn good signature right there, in my opinion. Anyways, with regards to with regards to price action right here, we actually did print a bearish engulfing 3-day dildo that did confirm yesterday night. So the 3-day is not looking so hot right here, to be fair. In fact, it's really, the higher time frames are where I start to think that we actually do certainly have this downside into the 8,000s. Both the 3-day and the weekly really make it seem so. I believe that we actually even broke the 21 on the 21. Yeah, we did break the 21 as well. And look at where we're finding resistance today. We're finding it right above the 21. So both the 21 exponential moving average on the 3-day and then the red 10 simple on the weekly, providing the impetus for resistance, just as we said. That does make it a little bit more difficult, man. Looking at this right here, I'm not the biggest fan of this setup. As I take off the simple moving averages right there. There we go. And get these guys back on. Get your beautiful faces back in the game. There you go. And this actually, if we actually take out the wick of the last 3-day dildo at 91.11, then this would imply actually a move back down here towards about 8,200. So plenty of things pointed lower. To be fair, it's not one-sided at all. If we go over here to the 3-day Stokes, they are fucking nosediving, no doubt about that. Getting into the bearish control zone for the first time since February of this current year. But they're not really telling us all that much about the momentum. I mean, it's just saying that we're still gaining momentum to the downside. I think what's a little bit more appropriate is actually the 2-day and the daily, which both of these I do think suggest that we're closer to putting in a low on this consolidation than we are not. And I'd really kind of run with that as my general message. I just don't think it's appropriate to get bearish until we actually break 9,400 on a 4-hour dildo closing at the very fucking least. And even bearish is the wrong term. It's just looking for significantly more downside, to be fair, like another $1,000, maybe $1,500 move to the downside. If that happens over time, it's not going to happen like immediately, but over time. And, and then I'd be looking for something like that. But looking at 2-day right here, like I said, 2-day Stokes getting way down there, while daily already kind of turning around, and this could confirm today in less than an hour now, and 12-hour already there, and they're actually gaining momentum to the upside. So I actually like both these, and it should spill on over into the 2-day. Which do we close one today? We don't. So it's so this is going to be kind of meaningless in a way. Looking at 2-day RSI, do we have anything to be aware of here? Nope, we have no divergences, no nothing, just kind of floating around in space mon, but basically just going between the bullish control zone and the neutral zone as the 2-day Stokes start to bottom out a little bit. So putting all the puzzle pieces together, actually, it's a very strange thing, but it's like I don't want to be bullish, I don't want to be bearish, but if I had to lean one way, I'd probably lean a little bit to the upside. We already got the move that we were looking for this morning, back up to about 9,900. Again, doing the lower time frames is quite difficult right here. There's multiple ways to chart this. Technically, the right way to chart it, in my opinion, would be having a horizontal right here, and we basically just had a fake out above it. So we hit our target, then quickly got rejected. Basically, came back down to the blue box territory right here. Got rejected from that to the upside, which is good, but still kind of figuring it out. So more sideways action, and that's really what I've been saying for this past week and a half. Hey, we can do all the mental masturbation, technical analysis that we want to do, but at the end of the day, this is most likely to go sideways, and that's why I fucking love options. Holy shit, man. You guys have been watching this for the past couple weeks as well, and probably doing it yourself as well too, where it's just like for week number 1, two Bitcoin, then last week a little bit over 3 Bitcoin, and then this week working on a Bitcoin and a half thus far on Tuesday. This is the time to be playing options, really. I mean, and they're just so fucking easy to cover. The premiums on these things are just massive. They're fucking massive. They really are. So yeah, while we are here on the 4-hour, if I had to chart this out a little bit more, maybe I might even go down to an hourly here. Does this chart make any more sense? No, not really. Even the 4 hours kind of sloppy. I'd certainly hold on to having a horizontal right here, but it's not really lining up with anything else. Well, it is lining up with these guys and these guys, so it is a trend. It certainly is a trend line, but we have so much in here that I'd actually say that it's probably a little bit more appropriate to just concede this area right here and make a range between the blue 3/7 cent exponential moving average at about 97.50, and then this blue box down around here right around 9,400. Any sort of a break outside of this range will resolve the lower time frames. If it's to the downside, it will also resolve the medium time frames and the long-term time frames, and we will head down likely for the next month or so. Maybe not next month or so, but we would certainly. It's probably more appropriate to talk about downside targets more than anything, which would be again 8,800, 88 to 8,900 would be first target, then 8,500 after that, and then probably like 78, I think, after that, something like that. If we break this to the upside, does that imply a resolution on even like the medium time frames? No, it doesn't. It would imply resolution on the lower time frames, and I'll be looking for a test up into this blue box right here, which can have carry on over into the medium time frames, because guess what? Where is this area coming in around? About 10,200. Where is 10,200 confluent with? The daily 21 exponential moving average. And of course, I've been repeating this ad nauseum as well, so I don't mean to bore you with this. Or it's actually a little bit lower than that, about 10,150, and going to be lowering with each and every passing tick now. If we can get back above that area, then I will be happy to hold medium and long-term longs once again. My rule is that if you're trading on the overall side of the general macro trend, which in this case would be the upside, I'm happy to hold longs and be long on a medium and long-term time frame perspective, as long as we are above the yellow 21 exponential moving average. If we lose it, however, my rule is I'm not holding any medium-term or long-term longs. Can you trade short-term? Yes, absolutely. Of which we've caught plenty within this region. Of course, on Twitch, on Twitch this past Sunday as well, which I had a lot of fun, man. So if you aren't on Twitch already, definitely go check out Twitch. I think my handle there is Krown Crypto. I'm not really gonna like announce streams or anything like that. They're just gonna be impromptu, because it'll just be me like kind of hanging out with myself, I guess, at first, and then I get bored and waiting for trades, and it's like, well, why not just start a stream? But it's a lot more of like a laid back environment, I suppose, than like a YouTube stream, which kind of feels a little bit more like it's a little bit there's a different vibe to it. But I really like the Twitch environment, man. I really, really like the Twitch environment, and it seems like everyone's just kind of hanging out, which I fucking love, man. Don't get me wrong, I love YouTube too, but I love them both for different reasons. Anyways, what we're looking at right here, still, at the end of the day, all you have to do, 21 exponential moving average to the upside. If we break it, I'd be targeting to move towards 11,200 first target, and then probably like 12,000 after that. A little bit more medium term. To the downside, 89 exponential moving average, or a 4-hour deal to close below 9,400, and probably looking at a move likely into this region right here. and perhaps a little bit lower. I do think that it's probably more likely that we actually overshoot if we head to the downside. We probably shoot somewhere around the daily 200 exponential moving average right here. Actually, to just for my own knowledge, how often do we test the 200 exponential moving average in an overall uptrend? Let's actually take everything off except this right now. Let's just kind of go back and see what the results have been. And again, it's just the only moving average that you see right now. You can see that Bitcoin actually does test it multiple times, certainly. So it's certainly not out of the question to actually come down and test that. And I'd say probably, if Bitcoin does initiate the downside, probably somewhere around there, because it would run over all of the genius gap buyers, right around here, and probably do just enough to liquidate them. Because remember, this game is a game of liquidations, and when we have exchanges like BitMexico, Deribit, Bybit, all these exchanges with 100x leverage, or even if you have like 10x leverage, is fucking insane. That's fucking insane, man. 10x leverage is fucking insane. We had 4x leverage in traditional markets. But when you have 100x leverage, the people who are moving this market know that a lot of people are just straight up over leveraged. And if you're over leveraged, well, then you are at the mercy of the market movers who can plot out where your liquidation price is going to be, or your stop losses if you're if you're just general retail, which likely going to come somewhere right around in here. If you're like doing 25x leverage at about 8,500, yeah, you're probably going to be getting liquidated somewhere right around here, which I would say anything over like 5x leverage is fucking severely over leveraged. Holy shit. This isn't like 4x, man, where you literally move in like 3 decimal places to the right. This is Bitcoin land. We're moving like literally hundreds of dollars per day. It's insane. It's fucking insane. But hey, that's kind of where we're at right now, which, to be fair, that's also probably why we're gonna have some volatility in the upcoming years with all these 100x exchanges. I just don't see how they're gonna survive. I have a strong feeling that world governments will put a lot of pressure on these people. Anyways, go check out CMEs for a second. CMEs do have still about the same, just basically the same chart as what we look at on spot. We're actually not getting too much difference from this. We do see the same setup right here with the yellow 21 and the green, and it's actually the green 50 exponential moving average on CMEs. If we break below the green 50, then yes, be looking for a move down here. Break above the yellow 21, be looking for a move up here. Pretty damn stock standard. Nothing too much else to say about it other than that. We do see daily soaks essentially matching up with spot, and I think 12-hour probably gonna be matched up. 12 are actually not matching up with spot. So there is that. But I suppose the most obvious thing here is that yes, we are working on a descending triangle. But that measure move can just as easily be applied to the upside. Which if we do actually break to the upside back above 10,000 on CMEs, not spot on CMEs, then I'd be looking for a move towards actually 11,000. So I'd put spot probably somewhere right around 10.8, 10.9, as if it's about a $200 premium, about $100 to $150 premium on these guys right now. Anyways, I'll leave this one situated to the downside just in case. And let's go over and check out GBTC. How did GBTC close for the day? I am curious. 1277. So actually closed pretty damn well in the day. And here's the thing: GBTC makes me think that we break up as well. The reason why I say that is GBTC actually did break its proverbial descending triangle to the upside, and we saw this one on the live stream earlier today. And we've actually seen GBTC lead spot prices intermittently. It kind of takes turns. This one's very difficult to gauge, but we did see it last week. GBTC did move to the downside first and then led spot, and right now we actually see GBTC breaking this trend line to the upside and accelerating to our next horizontal, which would probably put us somewhere around like 10,000 or 10,001 on spot prices, and getting and so far kind of falling back from that region. But overall, this breakout looks okay for now. Can very easily come back down to like 12.5 and still bounce off there, and that's fine. But we actually did get the moves, more importantly. So what I would say about this is that if we're looking for mental masturbation or things to mentally masturbate to, this would be it for the bulls right here. Not only that, but daily did have a decent close, a pretty decent close. Did close right around the red 10 simple, and I also consider this a test of the yellow 21. So we didn't really resolve the medium time frame perspective. Remember, the medium time frames on this one going to be dictated by the green 50 and the yellow 21. Any move above the yellow 21, and I'll be looking for a move probably back around here, around 14.5, which would align with spot around 11,000, a little bit above 11,000, and any sort of move down below the green 50 at 12.25. or around 12 and a quarter, I'd be looking for a move back down to about 1080-ish region. So yeah, this move is a little bit more confidence inducing. We do see daily Stokes getting way down here as we approach, or we kind of rally off a major support. I'd say that's more or less a good sign. Not only that, but we do see daily RSI having a little bit of hidden. I think we have a little bit of hidden bullish divergence here. No, we do not. I take that back. We do not have hidden bullish. I repeat, we do not have bullish divergence. No bullish divergence to be had. It looks like a rejection of the bearish control zone, but there's not really too much to be gleaned off that to begin with. Going to a 4-hour, do we see any sort of hints here? 4-hour had an okay close. We do see 4-hour Stokes actually picking up momentum right there, so I would say that is a good thing. And 4-hour RSI, a little bit of bullish divergence coming off the low and rallying up to the 21, but that's to be expected. Other than that, I'd say a few more points in the court of the bulls. I do think that Bitcoin probably does move up here, but do I have open positions myself? No. In fact, I'm short call options, but I'm very much happy to be a buyer of spot. If it comes to that, I'd love to be long spot. Just give me the fucking sign, baby. Just give me the sign. I'll put all my dicks in there. Just kidding. Let's go look at gold for a second, because gold and Bitcoin seem to be quite correlated, and gold's looking very constructive here. And again, this is what I've been saying for the past, the past week or so. We came down to the 21, but what is my rule? As long as you, as long as you have the golden cross on this time frame, I'm happy to be long. As long as you're above the yellow 21 exponential moving average, you can see that there's no breakages below here. We just get to float upwards and onwards, and I'd have to be bullish on this one, man. Looking at daily Stokes right here, they're holding in the neutral zone, kind of fighting for the bullish control zone once again, and we're crossing the upside. It looks like. Not only that, but we do see daily RSI obviously consolidating between the bullish control zone and the neutral zone, which would imply that this is a bullish consolidation. We're back above the exponential as well, so this overall good setup. And let's go check out the weekly. I'm curious how this one's shaping up right now. The weekly looks constructive. Have we taken out last week's high? We have not. We came just about a $0.50 shy of doing so. If we take out last week's high, just at 1433 spot 826, I would be looking for this to continue onwards and probably make new highs. This is overall a good setup right here. All the moving averages are starting to diverge away from each other. I still stick by what I said. I do believe that the breakout is real, and if the breakout is real for gold, it likely does correlate with Bitcoin. We do have an indicator for this, of course, which is the correlation coefficient. Shout out to Bali for this one. And this one, you bring it up right here. Come on, baby. There it is. We can see in the purple histograph down here that, yes, Bitcoin and gold are showing to be correlated, and they have been actually increasing their correlation, especially ever since gold put into lows, basically around the same time as Bitcoin, actually. So this is a good thing overall. We do see monthly Stokes straight up to the sky as well, which reminds me, we should probably talk about Bitcoin monthly as well, which, hey, if you're looking at Bitcoin monthly Stokes, straight up to the fucking sky. Bitcoin monthly RSI, getting rejected from the bullish control zone, but I do think that we get picked up anywhere around the exponential on the next tick. And in Bitcoin monthly Joule actually getting back above the pink slower oscillator, which is not like a phenomenal buy signal, but it kind of lines up in the more bullish trajectory. So all those things relatively good. And that's what I'd say about that. Anyways, okay, all right. Let's go back and check out. We'll check out Bitcoin dominance. I'm not going to go over all the highly esteemed altcoins today. The highly esteemed, amazing altcoins, which are going to change this world and do everything that you've ever wanted in your life. Instead, I'll just look at the Bitcoin dominance chart, and we can come up with some general principles. It does look to me like Bitcoin dominance does want to pop back up here, probably around to about 68 and a quarter maybe. So that would spell a little bit of a hurt for alts in the shorter term time frames. However, I think I'd still hold on to what I said about this about a week and a half to 2 weeks ago, that this has topped out for now. And while I do think that the next move is to the upside, maybe back around 68 or 68 and a quarter, I think that more medium term we likely do come down into this region here at around 65 to 65 and a half. That's where I'd actually look for a legitimate reversal to be put in, and so that would imply that in the medium term alts do get to rally up versus Satoshis. I don't know what that means for their dollar value, but likely goes down actually. And then longer term, I'd look for them to get hurt once again. But for now, we've hit two major measure moves from like formations that we literally spent a whole year putting in right here, and then more recently this ascending triangle right here, and then obviously the weekly 200 exponential moving average providing the impetus for resistance. So it's likely to take its time going around here. In fact, I'd even go as far as saying that it's certainly not out of the question that we actually pop all the way down to test the red 10 simple. That's at 64%. So I would say first and foremost, I'd give 65.5%, 65.5% a chance first, which would imply that we have some downside in the interim. But I do think that we bounce off there, and then if things were to get a little bit more nasty, then we maybe come down to the 10 simple. But ultimately, longer term, I'm still massively bullish on this, and I think that's a takeaway point. So alt probably get a little bit hurt in the very short term price action. Medium term, they probably actually rally up quite a bit, maybe up to their weekly 10s or 21s, and then longer term, they probably get pushed back down once again. Let's just quickly look at my favorite one to kind of pick on, but it's not because it's not because I hate Cardano. It's just because it's the easiest one to really see. And versus Bitcoin, yes, looks like it wants to come down a little bit here to me, probably back down to about 600 satoshis, but I do think that it rallies off there, and we do ultimately find our way higher towards 700, maybe even 800 satoshis. And at that point in time, I'd be looking for the Bitcoin dominance chart to probably pick up once again. But we'll come back to that, if and when it does happen. For right now, let's go check out the other top two shitcoins. Highly esteemed, amazing altcoins, which are definitely better than Bitcoin. Bitcoin's old technology. It's bullshit. These snails are much better. And we can look at Mr. Buteau right here on Finex, and Mr. Buteau does look quite sick. He's certainly not leading. He's certainly following the other top two. So we do have a very obvious. I guess I already have it in there. We do have a very obvious symmetrical triangle coming off the low. Symmetrical triangles are kind of like an equal opportunity formation, like a social justice warrior pattern, where you're equally likely to break out to the upside as you are to the downside. This one is just going to follow whatever Bitcoin or Litecoin does. Those are the ones that are leading right now, and maybe BNB as well. I'm not quite sure. Maybe Monero has shown some signs every once in a while, but for the most part, Litecoin and Bitcoin, actually with an emphasis on Litecoin too, have kind of been leading the market. So a break to the upside, and I'd be looking at a move towards 240, probably 250 at that point. Break to the downside, probably coming back down here towards 180-ish region. That's kind of what's at stake right now. And if we go to a weekly, the weekly looks weak as fuck. I mean, Mr. Buteau's chart is bad. Make no mistake about it. It is bad as fuck. But if Bitcoin and Litecoin pick it up here, then I would imagine that Mr. Buteau does as well. I think lower time frames are a little bit easier to kind of chart out. And we could do something like this. We could say, hey, any sort of a 4-hour total close below about 204 and a quarter, then yes, I'd be looking for the downside to be initiated. Any sort of a 4-hour total close back above 215 and a half, I'd be looking for the upside to be initiated. Let's go check out Mrs. Litecoin, the star of the show. Actually, I should have started off with her because she's so beautiful, she's so lovely, and she's such a fucking tease. Hanging around this purple 200 exponential moving average. I hate those guys. they take all the Litecoins. When is she going to realize that 200 exponential moving average is a fucking jerk? And I'm a nice guy. I listen to your problems all night long, Mrs. Litecoin. What the fuck do you give me? Anyways, you do see that daily stocks are actually headed to the downside right now. This is actually kind of bad. Perhaps even to be interpreted as a rejection of the red 10 simple moving average on the daily right here. But the feeling is it's actually kind of more similar to Mr. Buteau in a sense. The 200 exponential moving average supporting price action quite valiantly, but second that this baby breaks, and I'm looking for a move back down to 77 to 78 bucks if that were to happen. If we do break and close a daily doodle above the red 10 symbol about 92 and a half bucks, and yeah, I'd be looking for a move probably back towards 101, 102 region. Kind of coming down to crunch time right now. But the weekly did have a pretty fucking bad close last time, and look at where we've come back up. We come back up right to the yellow 20-month exponential moving average, and thus far stifled on this movement. So it's still leaving a lot of questions to be answered. Lower time frames, kind of similar to Mr. Buteau, a little bit easier to kind of make these decisions based off of. If we do close a 4-hour doodle anywhere below 88 bucks, then yes, I'd be looking for the downside move to be hit down to 77 to 78 bucks. If we do close a 4-hour doodle anywhere above about 94 bucks, then I'd be looking for a move likely back up here towards 103 to 104 region, and then probably higher over time. But for right now, that's what we can kind of synthesize it down to. I think we should briefly touch on traditional markets for a second. Traditional markets, finding support right off the 4-hour 21 exponential moving average right here. I'm gonna imagine that's probably the daily like 10 simple maybe. Oh man. Been doing this too much, man. Been doing this too much. Yeah, it's right on the daily 10 simple. Jesus Christ. So I'd still be bullish on this one overall. I'm always going to be bullish on something that's above all major moving averages, especially as they're diverging away from each other. We'd have to close a daily doodle below 299 for me to even consider some like legitimate downside into the mid 290s. It's not even that crazy. I think the weekly is quite strong, man. I think that this is bullish. And I've been bullish on this for a long time. And it's the same thing as it's the same rule as Bitcoin applied to this one, but it continues to maintain above all major movement averages with special importance to the yellow 21. Fucking good, man. Fucking good. Looking at the monthly, which is going to be closing in tomorrow or after tomorrow's daily little close. And what do we see here? Monthly Stokes back up in Adams, holding the same area, going all the way to 2009. Fucking nice. And this is exactly what you expect during your prolonged uptrends. Not only that, but monthly RSI going to retake the exponential and head towards the bullish control zone on the next take. This is looking pretty fucking good, I'd say. It's still have to be bullish on traditional markets. Anyways, going back to Bitcoin right on over here. Start to wrap this bitch up. Hourly looks like it wants to pull through, but I'd really pay a special attention to the daily little close today, as the daily little close not going to really, it's unlikely to break any of the ranges here. We're still going to likely be in the same overall range, even on the very low time frames. But what we will get clarity on is daily oscillators. So if we actually do see daily Stokes really gain momentum to the upside with, and I'd imagine that they do with any close above 9,600, then then I'd be looking for another push higher most likely. And I do think that we get that. If I had to really take a direction here, if I really had to trade this one, I would, I probably would trade this to the long side. It's choppy as fuck, it's ugly as fuck, but that's really, I'd probably be aiming towards there. Again, like I said, hey, am I long myself? No, I'm actually short. But understand that I'm doing, different things right now, playing options. And I do want to mention this. My theta right now is 41.50. It's actually gone up since yesterday, so that's $4,000 coming into my account with each and every passing settlement period. Granted, everything else stays equal, which they do not. So, things are coming out, other things going in, but that's the time decay of these, of these options. And that's really why I love to play them. I'd rather do things with, dedicated towards time decay rather than trying to just say, oh man, are we going to get one of these scam wicks right here? Or are we going to get scam wick to the downside or the upside first? Which one's going to happen? Right. Anyways, lower time frames, you could kind of size it down to this. Any move below 9,400, bad, really fucking bad. Probably targeting moves over time into the mid to low 8,000s, I'd imagine. Any sort of a move back above this region right here at about 97.20, we'll call it. Especially any sort of a 4-hour total close above 97.20, and I'd be looking for us to hit actually in this blue box territory here, a little bit more medium term based. Again, it's likely to be a slow trudge, but if we do that, I'd be looking somewhere right around here at about 10,150 to 10,200ish region, and then a short term pullback, and then probably try again higher after that. But for right now, Bitcoin's literally in the same range that we've seen it for the past 4 days now. About 4 days now. This is pretty intense right here. So the resolution of even the lower time frames is likely to have big carry on over into the medium and higher time frames, which you can already see the higher time frame also to start to switch around. So you can kind of start to see the signature go in there, but as with anything, probably still a little bit more sideways action, I'd imagine. As we prepare for the actual move. So with that said, I'm going to leave you off right there. I will be back on tomorrow with some more video and live stream analysis. Look forward to seeing you there. As always, do want to wish you a nice little happy Tuesday mid-afternoon or early evening, and or early Wednesday morning if you're over there in Europe. And I'll be back, and I look forward to seeing you soon. Take care.